Good day guys, welcome to today's class. If this is your first time on this channel, please hit the subscription button so that when we drop more educative videos, you will get notified. So in this class, we're doing CVP analysis for multiple products here. CVP analysis, and please, if you have not watched out for my previous videos, this is the fourth video as you can see on the board. So if you have not watched out for my previous videos on CVP analysis, I will drop the link right under this video. Check it out before you come to this. Thank you. So now, what do you mean by CVP for analysis for multiple products? Yes, there's the formulas we've established so far. If you have watched my previous videos, formulas like formula for calculating break-even point in units, break-even point in values, and all of those formulas. Yes, we are not going to be disregarding those formulas. We are still going to be using them, but just little difference, and I will explain it here. You see, if you want to do CVP analysis for multiple products, there are two methods, or in two ways by which you can solve for that. The first method I'm going to be explaining, don't worry, you might not really get it while I'm explaining, but the moment you start solving questions, understanding, you get it right, it will come forth. So now we have two methods. The first method I'm going to is what we call CMR method, or and the second method is what we call, I'm not using the CMR, I'm using the I seem to forget the formula now. So I'll use sales mix. The second one is sales mix. So the first formula is the first method by which you can go is using the CMR. I said it in my last class that you guys should not underrate this CMR, contribution margin ratio. Contribution margin ratio can also be called, you can also call it contribution to sales ratio. So please know that they all means the same thing. Either you see it as contribution margin ratio, or contribution to sales ratio, or PV ratio. So this PV ratio is the profit volume ratio. They are all the same thing. They all mean the same thing. So is either I go by the CMR method, which is also called contribution to sales, or PV ratio, or I go by the sales mix method. Now let me just give explanation on this sales mix method. So you are familiar with this already if you have watched my previous videos. Now what is this sales mix method is that whenever we are producing and whenever we are selling, we need to establish a relationship between the two products we are selling. Let's say we are selling two products, product A and product B. So of all the sales revenue we are generating, 3/4 is from A and 1/4 is from B. So in every question of CVP analysis that involves multiple products, you'll be given, we call it sales mix. Yeah, sales mix. So sales mix is how many of your sales revenue, how many does product A gives you out of your sales revenue? How many does product B, how much does product B gives you out of your sales revenue? So for example, if your sales revenue is 100,000, so that means that product A is giving you 3/4 of 100,000. So 100,000 times 3 divided by 4 is what product A is accruing to you, and product B is only accruing 1/4 of the product. So that is what, there's always a sales mix, and I'm going to be using the two methods to solve a particular question now. So you just have to follow. We take the question and we solve. Follow. I want you guys to follow it back to back so that you guys will get it. And so we use this sales mix. And let me explain why we need this sales mix. We need this sales mix because if I'm dealing with two products, yes, let's say I'm selling for product A, I'm selling 70 units, and for product B, I'm selling 10 units. So it will be very wrong of me if I'm selling 70 of product A and 10 of product B, if I should assume that the revenue I'm going to, or the contribution I'm going to make from A will be the same thing as B. No, because A is 70, B is 10. So we need to make sure that for any value of A I'm picking, I'm considering the fact that A is more than B. And for any value of B I'm picking, I'm considering the fact that B is lesser to A. That's why we need to weigh it. Yes, weigh it. That's why I call it weighted whatever. Let's take a question. I don't want to take much of the time. Let's take a question and solve together, and let's see. So the question goes thus: Nahoma produces two products named MA and FM. The cost and revenue information are shown below. Product we have MA and FM, sales units, variable cost per unit, and selling price per unit. So for MA, 40,000 units is what we sell, and variable cost is 60 naira or 60 Ghana cedis, and selling price is 80 naira. For FM, sales unit is 60,000, variable cost per unit is 80 naira, and selling price per unit is 120 naira. So we are now told that assuming total fixed cost for the firm is 400,000 naira, what is the break-even point in units? Roman figure 1. Roman figure 2, break-even point in value. Yes, so that's the question. If you don't get any answer of the question, please take it back so that you can understand. So the first thing we ask us to calculate is to calculate the break-even point in units and break-even point in value. So we start with the contribution margin ratio method, and we will now move to the sales mix method. But I want us to go back to this question again. Look at the part where the question says sales units for MA is 40,000 and for FM is 60,000. You see, that sales unit of 40,000, they said they produce two products, MA and FM. MA is 40,000 units and FM is 60,000. So this is the sales mix that I was saying. The sales mix I explained earlier. This is it. So for MA, this 40,000 unit that was produced and 60,000 unit that was produced is not for the current whatever we want to solve. It's just a past history of what they have sold, probably in the last accounting period or whatever. So we are selling 40% of our sales is gotten from MA, and 60% of our sales value is gotten from FM. That is what this means. So going by the contribution margin ratio, going by this formula ratio, contribution margin ratio, the requirement is that we should calculate the break-even point in units and break-even point in value. And don't forget that if you want to calculate the break-even point in value, I said it in my last video before this, that the break-even point in value is also equals to fixed cost divided by your CMR. I said it in my last class. That's why you need to watch the video before this. That if you want to calculate break-even point in value straight away, your fixed cost divided by your contribution margin ratio. And I also gave us the formula for contribution margin ratio. I said CMR, the formula for CMR, or to get your CMR, which can also be called contribution to sales ratio, or you call it contribution to sales ratio or PV ratio, is your contribution over sales. So your CMR is your contribution over sales. So what we need to calculate in order to get our break-even point in value is to calculate our contribution over sales. So how do we calculate our contribution over sales? Don't forget that we are dealing with two products MA, and we are dealing with products FM. And contribution is simply sales value minus variable cost per unit. So let's go back to the question. For MA, what is our sales value? From the question, we're told that MA, the selling price is 80 naira. So selling price, sales, is 80 naira. And what about for FM? For FM, the selling price is 120. So in the question, were we given the variable cost per unit in the question? Yes, we are given the variable cost per unit in the question. So variable cost per unit, from the question for MA is 60 naira and for FM is 80 naira. So to get our contribution, we subtract our variable cost from our sales value, So 120 minus 80, I have a contribution of 40 per product, and MA contribution of 20. So this contribution for MA is contribution per unit. That means that on one product, the company earns a contribution of 20 naira, and on MA and on FM, the country earns a contribution of 40 naira. Now, if the company is earning a contribution of 20 naira on MA and a contribution of 40 naira on FM, how are we going to get our contribution to sales ratio? But if you look at it, these sales, we have two sales for two different products. Contribution, we have contribution for two different products. So which contribution are we going to put over sales to get our CMR? It's quite confusing. Don't let it confuse your CMR. That is why it is called weighted. So at this point, it's not just contribution anymore, but weighted contribution and weighted sales. That is what we call it. So you are not using contribution for a product, you are using contribution for the two products. How are you going to use it? By multiplying. From the question, we are told that the amount of FM that we do produce is 40,000, and the amount of MA that we do produce is 40,000, and the amount of FM that we do produce is 60,000. So the contribution, if they earn 20 naira contribution on one product, how much contribution are they going to earn on 40,000 products, which is the total product being produced? So contribution of 20 naira multiplied by the sales unit that was produced, which is 40,000, and for FM, contribution of 40,000 naira multiplied by the 60,000 that's been produced. So how are we going to get that? Going by my calculator here, I have 40,000 multiplied by 20, I have 800,000. 800,000, and 40 multiplied by 60,000, I have 2,400,000. So by my calculator here, if I multiply 40 times 60, I will have 2,400,000. So that is why it is called weighted contribution. So my weighted contribution, my total weighted contribution is 800,000 plus 2,400,000. So my total weighted contribution, is 3,200,000. So let's now get our weighted sales. How are we going to get our weighted sales? Since we have calculated the this is the sales value and the variable cost per unit. So we've calculated the contribution, right? Let's calculate rather the sales that we earn from selling each product. If I'm selling one product 80 naira and I'm producing 40,000, how much am I going to be earning after selling the product? So the sales for MA will be 80 naira per unit multiplied by 40,000 units. So 80 naira per unit multiplied by 40,000 units. That will be 3,200,000 for MA, 3,200,000 for MA, plus now for FM, unit price is 120. So 120 multiplied by 60,000 units, that the sales mix that we have been given. So 120 multiplied by 60,000, that will be 7,200,000. 7,200,000. So if I had 7,200,000 plus 3,200,000, so plus 3,200,000, I'm going to be getting 10,400,000. 10,400,000. So this is how to calculate your contribution margin ratio for two products. Hadn't been it's a single product, I would have just used the single product contribution divided by the sales. But since it's a joint product, a two product, you calculate the total, the weight contribution of each product by multiplying the contribution of each product multiplying by the unit produced. Contribution of this product multiplied by the unit produced from the sales mix you were given. Then you get a weighted contribution, and sales also, you will do the same thing for the sales to get a weighted sales. So if I divide that 3,200,000 divided by 10,400,000, I'm going to be getting 0.30% or 0.31%. My contribution margin ratio is 0.31%. This is my contribution margin ratio. Now, since I've gotten my contribution margin ratio, it's very easy for me to get my break-even point in value, because we already established a formula that break-even point in value is fixed cost divided by contribution margin ratio, and my contribution margin ratio is 0.31%. And our fixed cost from our question, we have already been given that our fixed cost is 400,000. So it's very easy for me to calculate my break-even point in value. Let's see how we're going to get that. Now, so since this is my CMR that I've gotten before is 0.31, so since I already know the value of my CMR, I can calculate my break-even point in value by just saying that break-even point in value will be equals to my fixed cost from my question is 400,000 divided by 0.31. So for you to get an exact answer, you don't have to approximate. Just whatever value you get in your calculator, just say 400,000 divided by that value, raw value, because approximating sometimes might, affect your answers like that. So 400,000 divided by 0.31 and whatever I got in my calculator, 400,000 divided by answer, I got 1,300,000. So the break-even point in value is 1,300,000 naira. So as simple as that.